The Bank of Japan is poised to make a critical decision this Friday, with potential ripple effects for Bitcoin stability. Analysts predict a rate hike could push Bitcoin below $70,000, as previous BOJ increases, historically, led to 20 to 30% price corrections. Macroeconomic signals and bearish technical patterns corroborate this, with investors already adjusting positions to mitigate potential impact. This overlooked detail in a recent Spanish police operation reveals a chilling new trend in the crypto world. A cross-border criminal group kidnapped and murdered a man for his digital assets, leading to 5 arrests in Spain and 4 charges in Denmark. This isn't just about hacking, it's a wrench attack, where criminals use physical force to get your crypto, much like forcing open a digital safe with a crowbar. A single software bug just cost Ethereum validators over $1 million in ETH, exposing a critical vulnerability in the network. The Prysm consensus client's error, triggered after the Fusaka upgrade, led to missed blocks and attestations, temporarily reducing network participation to 75%. This incident renews urgent calls for greater client diversity, reminding us that relying too heavily on one client is like putting all your crypto in one wallet, risky. Despite significant ETF outflows and a major whale selling 7.6k ETH, Ethereum's price surprisingly refused to crash. A large Ethereum whale accumulated $1.7 billion in ETH over 40 days, even with unrealized losses, while buyers absorbed recent selling pressure around the realized price. This resilience, despite high retail dominance, suggests strong underlying demand, with the realized price acting as a crucial support for potential future expansion. Imagine seamlessly connecting your digital identity across different blockchains with a single, verifiable proof, solving the fragmented wallet problem. Ethereum's new ERC 8092 proposal aims to do just that, allowing accounts to formally link using cryptographic signatures for enhanced security. This standard could simplify multi-chain identity, enabling sub-accounts, delegated authorization, and unified reputation, much like linking your social media profiles for a clearer picture. Imagine your salary losing value within hours. That's the harsh reality facing millions in Venezuela. To counter this, citizens are rapidly adopting stablecoins like USDT and USDC, which are pegged to the US dollar for stability. This on-chain dollarization now sees stablecoins dominating over 80% of crypto transactions, becoming a vital tool for daily payments and savings. Despite Ethereum's recent price retreat, institutional investors are pouring hundreds of millions into spot ETH ETFs, a move that defies immediate market logic. Last week, US-listed spot Ethereum ETFs saw $209 million in net inflows, with BlackRock leading, and overall ETF demand now triples new ETH issuance. This strong accumulation, where demand outstrips new supply, suggests large-scale investors are building long-term positions, viewing current prices as strategic entry points. BioLabs just secured a massive $10 million in funding to scale its cross-chain crypto yield optimization protocol. This platform automates yield generation across DeFi protocols, uniquely factoring in risk and minimizing bridge vulnerabilities with its Embassies architecture. Led by Foundation Capital, this Series A round will expand YO protocol to more blockchains, aiming for safer, sustainable yield for users. A massive shift is underway, as oil-rich investors, including sovereign wealth funds, are now funneling capital into Bitcoin via regulated ETFs. This move, centered in Abu Dhabi, is set to inject unprecedented liquidity, deepening market structure, and enabling larger trades. Driven by diversification and long-term strategy, these inflows, despite recent volatility, like IBIT's outflows, signify a maturing institutional embrace of crypto. Top analysts are now calling Ethereum's price chart a Wyckoff masterclass, hinting at a potential surge past $10,000. According to crypto analyst Merline the Trader, ETH is in a textbook Wyckoff accumulation model, currently in Phase D. If this structure holds, it's poised for a powerful Phase E expansion, with projections targeting above $10,000. For the past 3 months, investors have pulled over 196,000 Bitcoin from major exchanges, a move that could reshape the market. This significant shift, with balances at 2018 lows, suggests growing investor confidence in self-custody, reducing selling pressure. Yet, regulatory changes and institutional accumulation also contribute, meaning outflows alone aren't a guaranteed predictor of price appreciation. This major upgrade just went live on Solana's mainnet, promising to redefine its transaction capabilities. Firedancer, developed by Jump Crypto, aims to boost network stability and handle massive transaction loads, with tests showing over 1 million transactions per second. This move, signaling Solana's exit from its beta phase, sparked a 5% SOL rally and attracted $11 million in ETF inflows, contrasting with BTC and ETH outflows.